A renowned personality, Jeremey Grantham, co-founder and chief investment planner at GMO, senses a serious disturbance in the real estate market. Who is Jeremey Grantham? Jeremey Grantham is known for forecasting market declines. He's built a reputation for his foresight, accurately predicting the tech bubble in the early 2000s and the major financial crisis of 2008. His past successes speak for themselves, and his opinions are highly regarded in the financial world.
Real estate is a global bubble. It has driven house prices provably to multiples of family income all over the world. No one can afford to buy a house now. Yeah. No young kids coming out can buy a house. House prices will come down in everywhere.
Hey there, everyone. Let's explore a topic of universal significance today: the world's real estate market conditions. You're probably aware of the recent major boost in the housing market. Prices are skyrocketing while demand exceeds than supply. However, booming times often hide a serious concern: the brewing storm, Grantham's concerns. Jeremey Grantham isn't merely making forecasts on gut feelings. He gives a strong argument supported by undeniable proof. He claims the existing real estate market is dealing with a bubble surpassing past ones he predicted. Multiple crucial aspects are contributing to this bubble.
So to put a bow on this, as a bubble historian who is eager to see them, are you guilty of being too eager to see one now?
I don't think so. I think everybody else is guilty of the usual crime of expecting a soft landing when it never comes, but is always claimed, believing the Fed, who has never gotten one of these bubbles right, regardless of the fact they have involved several different Feds.
They help create them. They don't see them.
Underestimating the time that it takes for some of these things to work through, particularly real estate. And I'm sympathetic on that one because real estate is a global bubble. It has driven house prices provably to multiples of family income all over the world. China, Beijing, Shanghai, you tell me, 15 times, 20 times family income, Sydney, Adelaide, etc. Canada, the UK, London. There used to be multiples of 3.5 times family income. London is now 10. Toronto's worse, etc., etc. No one can afford to buy a house now. Yeah. No young kids coming out can buy a house. This is not a stable equilibrium. Furthermore, the mortgages have gone from 3, which explains everything, to 7, which explains nothing. And eventually the 7 will start to explain quite a bit. But how long does it take? I mean, just think. The first reflex is, I can't move, for God's sake. I can't afford to go from 3 to 7.
Sure.
So I am going to stay, which means no houses are on the market, which means for the handful of people who have to move, they're actually in a bidding war.
And prices stay up.
Yeah. But so real estate has never been about 3-month predictions. It works slowly but surely. In the end, you pay more because you could afford to. In the end, you will pay less because you can't afford to. House prices will come down in everywhere. From Australia, mentioned that in Australia, it's World War III instantly. They are more optimistic than Americans, and they hate any idea that they're real estate.
Jeremey, by how much? Because I agree, housing prices, it's an awful issue for people that are looking to get into a home. Are they going to come down by 10%, down by 30, or?
30 would be a pretty good guess.
1. Low interest rates. The Federal Reserve's strategy of keeping interest rates low makes it cheaper to own a house. This results in more people buying homes and hikes up prices. 2. Government stimulus. The increase in government financial support programs during the pandemic outbreak increased demand and contributed to skyrocketing the prices. 3. Limited housing supply. The shortage of homes, especially in popular areas, has led to a situation where demand far exceeds supply. This also drives prices up to unrealistic levels. True meaning of the bubble. Jeremey Grantham's evidence. Jeremey Grantham doesn't just depend on stories. He uses recognized indicators to back up his view of a bubble. Here are 2 vital indicators that Jeremey Grantham emphasizes. 1. The cost to rent. This ratio compares the price of a home to the potential rental income that is expected to generate. Right now, this number is higher than ever, revealing that people typically pay a lot more cash for houses than the potential return they might get by renting them out. Cost-to-income ratio. This ratio examines the average house price against the average income. This ratio is currently at a peak level, showing that homes are becoming less affordable for the majority. The potential impact. What lies ahead? If Jeremey Grantham's forecast is correct, the impact could be significant. Key factors may influence a noticeable correction in the real estate market. Price drop. When people want less and there's more available, house prices usually go down. This could mean significant losses for those who bought when prices were highest. House loan problems. Dropping prices and the chance of increased interest rates could make it difficult for more house owners to pay their home loans. This might cause defaults and foreclosures, financial crisis. A major collapse in the housing market caused a wider financial crisis that would affect the banking industry and the economy as a whole. Preparing for the storm. What you can do. Jeremey Grantham's forecast might seem problematic, but it's crucial to remember. We have power. We can fight this by taking proactive measures, making facing the coming storm easier and lowering the damage. Don't pay too much. Avoid the trap of competitive bidding or the anxiety of missing out. Be careful not to buy a house for a high price that could be hard to maintain over time. Spread out your investments. Don't keep all your savings tied up in real estate. Look into different methods of investing that could be less volatile and provide more stability when the market goes down. Creating a money back up. You can handle unforeseen costs and financial difficulties that may occur during an economic downturn by keeping an emergency fund. Keep in mind that preparation is essential. By following these steps, you can boost your monetary health and face possible issues with more assurance. Jeremey Grantham's forecast may feel uneasy, but knowledge and readiness are key. We can navigate the storm and come out stronger on the other side by understanding the potential risks and taking preventive measures. Thanks for joining me today. If you find this video helpful, please hit the like button and follow the channel. We offer more insights on financial understanding and navigating the dynamic economic environment. Share this video with your fellow investors and comment your thoughts about Grantham's predictions in the comments section below. Stay savvy, stay smart, and stay tuned for more informative videos.